Okay, so today I'm going to be talking about profitable short-term SPX option trades. I haven't done this webinar before, so you're new and I am new to it. So hopefully this will work for you guys. Okay. Okay, so let's see here. Let me get my bearings. Okay, so I wanted to start out by saying, how many times have you seen your position drop and take a loss only to realize that the market reversed, right? And that's one of the things that really frustrated me quite a bit. And so I wanted to fix that. Okay, and this is the process of me going and fixing this thing. So the process is that it takes into account by holding until the end of the day, 0 DTE or whatever position you have on, and manage that trade by rolling it until it's profitable. Okay, and there's different ways to do that, and today I'm going to show you how to do that and what the capital requirements are, so you have a really good idea of what you're getting into. Okay. All right, so that's the first thing. So let's talk about what you guys can expect. And I'm gonna show you how you can make these consistent returns monthly. Okay, and I've said this before, based on margin capital at risk, and this time it's really margin capital at risk, and using high probability trades without taking large losses, and make those returns month over month. And that's really the goal. Okay, so what are you gonna learn? Number one, how I went from taking 3x losses or 2x losses, whatever, in 0 DTE to no losses in actually months. So since May, I have not taken a loss, and I'm trading 0 DTE pretty much every single day. Okay, how to identify the strikes and strike prices you'll be using basically to increase your chances of profitability. When is the best time to trade? When DTE? I'm going to talk about that. How best to mitigate a 0 DTE that is threatened, and the capital requirements to manage in the money credit spreads. And I now trade 5 days a week. Okay, and then make steady profits on short-term SPX credit spreads, 0 to 5 DTE for the most part, without risking any more than you have to. All right. Okay, so for those of you who have been to my webinars before, there's a special bonus at the end, and I hope that you stick around for that, because it'll be good. Okay, and then also I just want to ask that you turn off distractions, you focus, take a paper and pen, and jot down your questions. I will try to get to all of your questions. Sometimes when we have a big group, and this one is growing, I don't get to every single one of them, but you can always email me, and I will always answer your emails. Okay, and sometimes I miss it, but I do get to your emails for sure. All right. Okay. Now I'm going to ask again, reason why you're here. Are you interested? You're interested in learning new strategies that'll take your trading performance to the next level, so you can finally leave that 9-to-5 career behind. Reason number two. Possibly, you've seen, heard about, and read about others making money trading, and you know how you can do it. You can do it too, but you're just not seeing your account grow fast enough based on your goals. And number three is you've tried different trading strategies that you thought, okay, this is it, only to discover it's not getting you to the place of consistent trading results, right? So let's see, I'm going to pull this up here. Publish. Okay. And so I'm just going to ask you which one of these is most closest fits you. All right, on this. Let's go to the next one. Let's see here. So we got three: interested in learning new strategies, desire to see your account grow month after month, or find the right strategy that provides consistent trading results. And if you're just all above, you can just say all above. Okay, cool. So we got, okay, it's an even split. Keep going, keep going, keep going. All right. All right, okay, we'll let this go a second, and then we will post the results. I think you'll be able to see it. Okay. All right. Okay, hopefully you can see it. I'm not even sure if you can see it. All right. So with that, I'm a regular guy. Okay, I live here in Puerto Rico with my wife. My kids are in the middle there. My parents on the right. So did the career thing for many, many years, and now I'm doing what I love to do, and that's trade. Let's think about mindset. Okay, we're talking about high probability trades, and so imagine what it would feel like if most of your trades were winners month after month, and it would be confirmed by watching the size of your account grow at the same time. Steady account growth, right? Number two is becoming the trader that no longer takes large losses but consistently trades according to a proven trade plan that is profitable over time, allowing you to grow your account month after month. Okay, that's really the goal, guys. All right. And if there's one book that I would recommend, it's not technical or tactical. It's Trading in the Zone. Okay, because mindset is probably 90% of a trader's of a trader's competency. Okay, the rest is technical and tactical. But if you have your mindset focused and in the right place, then it is the way to go. All right, so you can be successful. All right, so let's talk about what a SPX credit spread is, because some of you may not know what that is. Okay, and a lot of you are probably here and have experience with it. But I want to share what a credit spread is. It's a combination of two puts and two calls, where the put or call that is sold is more expensive than the put or call that is bought. And what that turns out to be is that it is a credit that you receive when you put on the trade. So you're selling before you're buying on that position. Okay, and in this case, I just set an example of the 40-50, 40-40. You're selling the 40-50 and you're buying the 40-40. Okay, and that basically is considered a high probability trade, and it's because you don't have to be exactly right on this trade in order to profit from it. Okay, now risk reward is horrible on this trade. It's so you have to give something, right? And the risk reward can get you into big trouble, because the reward is small and the risk is pretty large. Okay, and that's why there's a lot of traders that veer from it, but a lot of traders that embrace it and really know how to manage it will be very, very successful in doing this. Okay, so in this trade here, just to let you know how this risk reward is that for a 10 wide, which is what this is, 40-50 minus 40-40 is 10 points, right? You have to put up $1,000 in margin in order to take that trade on, right? Minus the $50 that you receive as a credit. So here's the credit, here's the margin requirement, okay? And and basically a max loss is $1,000 minus the credit received, and so that is what you're looking at in this trade. All right, $50, putting up $1,000 to make $50. Okay, and that's the way it is. It's just a lot of people don't like that, but if you don't like it, then trade something else, do something else. But this is how it is, and you can't fight it. Right, so I want to share with you the decay process in a call option. Okay, and this is on the SPX. And so from 68 to 33 days, the rate of decay is 34%. So with a credit spread, you're putting on a position that you want to close. Right, so if I put on a $50 trade, my goal is to close it at less than $50. Right, so and so what happens is there's a decay. If the market doesn't move at all or did anything, there's a decay in options that allows you to collect that premium and close it for a smaller amount. From 33 to 5 days, the rate of decay is 57%, and from 5 days to expiration, the rate of decay is 100%. And so you can see here that the decay ramps higher, right? The rate of decay goes higher as the expiration comes into play. And for 0DTE, it's just really quickly. Within a few hours, you get that decay gone, completely. Okay. All right. So we're going to talk about profitability factors. Okay. And number one is implied volatility, right? So volatility is a major thing with options, right? So if you have high volatility and you're selling an option, that's ideal. Okay. And sometimes you don't get that, but that's the ideal position. So you want to market with the volatility moving lower while in the trade, right? Placing the trade when volatility is high, then it decreases, will significantly reduce the premium collected. Okay, and that's what you want. You want the premium to squeeze in. All right. Okay, number two, theta. So now this is the rate of decay. So theta, it's one of the Greeks, okay, and it's the rate of decline in the value of the option due to the passage of time. And then number three is the market direction. So if you're putting on a position in the market, let's say it's a bull spread, right, and the market is moving up, that's good. If you have a bear spread, you want the market to be moving down. Okay, it's just the opposite. And so we'll talk about that more. Okay. All right. So let's talk about quickly risk management guidelines and daily routines. This is something that I use. Number one, I always trade with a plan. Number two, determine what your max loss is and risk reward. Okay, and we just went through that. Trade no more than 20% of your credit margin at risk, and you want to keep it that way, so that when you do have to roll or manage a position, you have the margin to manage it correctly. Okay, and so that's really, really important, especially now with what I'm going to share with you during this session. Do not allow more than 2% loss on your trading capital based on your trading capital. If you are taking a loss, okay, on that. For highly trending markets, it just makes sense for the market to for you to follow that trend. So most of the time, maybe not this year, but most of the time, the market is moving up. Okay. But lately, as we know, we've had pretty sizable downturns in this year, but that's okay because we trade on both sides. So size your trades to ensure your emotions are not part of the decision-making process. Trade small, trade often. This is what I always say. Okay. All right. Let's get going here. So pre-market routine, review the areas of support and resistance. And I use fibs to do that, and I'll show you some of that, when we get closer here in the session. The dollar, the U.S. dollar, is very, very important because as the dollar moves higher, the products that the U.S. sells to other countries become more expensive, and so that puts a crimp on on U.S. companies when the dollar moves higher. Okay, 10-year Treasury, you probably have heard of this a lot already. This is what the Fed is using. Bond rates, etc. When bonds go higher, there's more competition for money to be made there rather than stocks, and so it tends to squeeze stocks. Okay, I always review the futures where it's trending overnight. However, a lot of times the futures will trend in one direction and then reverse during the open session, and that's exactly what happened today. So you gotta understand and establish the trend if you're trading on a market direction scenario. Review VIX levels. VIX is very, very, very important because that determines how big your premium is, and I have charts today to show that. And they're pretty cool. Okay, they show a lot. All right, and to determine credit spread positions, especially in your 0 DTE before you put them on, so you're prepared. And today was a good example because it was a very fast market. The market moved down quickly. I put on my bear spread, and I actually got out early on it because I thought, well, let me just take the money today. All right, okay. So, and I'll be sharing with you a lot of different trades today also. All right, post-market routine. Look at what you did during the day, determine if your rules were broken, determine if risk was within acceptable levels, especially for wins, because when you win, you tend to be more complacent and you take generally more risk. Okay, it's an emotional thing. That's why, I mentioned trading in the zone, because you want to be consistent with your trades. I took a hit on my zero DTE a couple days ago, and I put on the same position to the next day, just because the market doesn't care, right? And if it's a high probability trade, you want to be consistent in your trading, to make that money every single day. Okay, so determine if tweaks or adjustments to your trading plan is necessary, and I'm constantly doing that. All right. In fact, I do have a trade plan out there, and probably a lot of you have downloaded it, but I'm going to be making a lot of changes to that trade plan, because of the things that I've learned this year. And you learn when you get losses, right? You learn when markets are not in your favor. And so I really learned a lot this year. All right, and then update your trade journal with your findings, especially if you're new to this. You want to document what you're doing and how you're doing it, so that you have a record. And it keeps your mind, in sync with what you're trading. Okay, so those are that. Okay, so now let's talk about the short-term options here. All right, the first thing I want to mention is pattern day trader, and this is, to me, the dumbest rule that's ever been made. Because you can trade a lot of different things day trading, and you won't get pinged for it. But for the SPX or other trading vehicles, you will. Okay, so what is it? It's the buying and selling and buying of the same security in the same day, and initiates 3 times or more in any 5 consecutive business day period, you'll get restricted. All right. And you don't want to get restricted anymore, because they used to give you, get out of jail free cards, but they don't do that anymore. All right. It's one time in an account, and that's it. You're 3 months restricted. And so that's not a good thing. Okay. And so if your account value is below 25,000, you have to realize that you're under PDT, you're under pattern day trader restrictions. And so if you trade more than 3 times in a 5-day period, you will get restricted in your account, and you're only going to be able to sell positions. All right. Hopefully you understand that and it's clear. Pattern day trader. How to avoid it: you limit trades to 1 trade 3 days a week. Manage trades from multiple accounts. Trade wider iron condors so that you let them expire. And you can trade ES future spreads because those are not under PDT restriction, even though they're very similar to SPX. But you can get away with not having PDT under trading ES futures or NASDAQ futures, etc. All right. Hopefully you got that and it's clear. So let's move on. Yes, this is being recorded, and the replay should be out today, actually. All right. Can you move your head from the text? Oh, I didn't notice that. Sorry, I can't move it. So anyway, let's move on here. Sorry about that. I'll have to look at it for the next time. All right. So let's talk about entry. Hopefully you can see this. Enter within 1 to 10 minutes of the market opening. I usually put on my trades for 0 DTE within the first 1 or 2 minutes. And I'm doing that because I want to capture the implied volatility. Wider spreads provide greater distance to the market, which is less risk, market price, but also require additional margin. Okay, if you're going to widen your spreads, you're going to get more distance to the market, but you're also increasing your risk because you're putting more margin down that you can lose. Okay, premium should be around 45 to 90. I usually get in around 50, 60 to 70, around that position. Take profit. 10 cents, is a great place to close a trade if you're you're not under PDT. Okay, closing. You can also close the short strike in the position, and so typically, if you have a 10-cent not a 10-cent profit, but if the premium goes down to 10 cents, okay, and you're closing the position, and you don't want to pay any commissions, basically, you'll probably have to wait a couple hours in order for that short strike to go to 5 cents, right? Just keep that in mind. And then expiration, and I have a group, and I try to close the trade at expiration as much as I possibly can, because I know a lot of people don't have $25,000 in their account. Okay, so I really work hard to let it just expire. Okay, so a lot of people use 2x and 3x, and I used to do that for the most part. I use the support and resistance, but I take losses, a lot, just because the market goes and it, and then a lot of times what happens is it just reverses, and I would have been okay, right? And that's the part that I wanted to change. And so rolling is what I substituted it for. Okay, so I roll zero. I used to not roll zero DTE. Now I do, and I roll it because I know how to manage it after it's rolled, even when it's aggressively going against you. And so when you do roll and you're in a zero DTE trade and you're and the position is being threatened, okay. The position is being threatened. You want to roll the trade a little bit before or at the money, okay? And that way you'll be able to lower the position quite a bit. And the reason you can do that is because the premium has almost expired, okay, in zero DTE. So if you roll it out 1 day or 2 days, you'll actually, there's a much fatter premium on those days, and you're going to be able to roll it down without having to widen the position. Okay, so that's really important. I mean, I've rolled down positions like 30 points right before the spread was going to be breached. Okay, and sometimes the position goes really, really far, but I can tell you that it's the preferred method, all right? And that's something that I'm learning now. I have allowed it to breach, right? And at that point, you're going to have to widen the position in order to get a credit on it when you're rolling it. Okay, all right. Okay, so let's keep going here. So 1 DTE. 1 DTE, you enter within 1 to 2 hours before the end of the trading session. That's what I found to be the best. And I usually put on bull spreads when I do that, okay? Because it gives you the greatest distance. And sorry about that, about the sound. So hopefully it doesn't happen again. All right. Enter within 1 to 2 before the trading session. And what I like to do, the best time to put on this trade is when the market is generally moving higher during the day. Okay, and then you get a drop in the market, and then you can put on that 1 DTE trade. Okay, and that usually works really, really well. All right. Premium should be between 70 to 90. That's what I usually use, and that's a delta of 7 to 10 cents. All right. Okay. Take profit. 10 cents again for each spread. And remember, when you're doing a 1 DTE, you're no longer subject to PDT restrictions, right? So you can close that trade when you have a nice profit on it. Either way, you can still let it go to expiration. Okay, trade threatened. roll the trade near the money, 1 to 2 days out. And again, if you do that before you're in the money, you're going to be able to receive a credit on that position. Roll the trade in. If it's in the money, you have to widen that spread. Again, I want to mention that. Okay, 2 to 4 is very, very typical of 0 DTE. You want to get in 30 minutes to capture that high volatility or implied volatility. I use a 70 to 90 delta on that as well. I mean, premium on that. Take profit, same thing. 10 cents, on those trades. Closing short strike with 5, so you don't have to pay commissions or expiration. Okay. The trade is threatened. Roll the trade near the money, 1 to 2 days out. If it's in the money, again, you want to widen that position. All right. So I'm going to share with you, something that I did analysis on. Okay, and I was trading 15 wide positions, and now I moved back to 10 wide. Okay, and the reason for that is because I'm going to show you here. All right. So let's look at the analytics on this trade. And so I just recently put this together, right? And so this is 0 DTE when the VIX was at 22. Okay, the VIX was pretty low, right? So you can see here, number one, if you're trading 5 wide, okay, you're less than 1% away from a position, and on the call side, and then on the put side, you're only 1.2% away from the market. It's very, very close. All right. So now you move up to 10 wide here, and you can see it's a huge, huge difference between the 5 wide and 10 wide. All right. Now when you get to 15 wide, you can see that it's diminishing. So the return is basically diminishing. And today, I looked at it today, and between and it was on both sides. Okay, between a 10 wide and a 5 wide, the distance or the point difference was 5 points only. It was only 5 points difference. Okay, and it just doesn't make sense to have a 15 wide compared to a 10 wide when it's such a little difference there. Okay, another advantage you have too is that when you're rolling a trade, and that's 10 wide compared to 15 wide, when you roll it and you widen the spread, the widening of a 10 wide to add 5 points is significantly more than adding 15 wide to a 20 wide. All right. So it's just the it's just the amount that you're adding is a lot more in a 10 wide than rating a 10, taking a 10 wide and and rolling it and widening it gives you a lot more distance to the market than rolling, widening a 15 wide to a 20 wide. All right. And I've experienced this myself. Right. So for that reason, 5 wide, it's just too small. It's too close to the market. 10 wide is for me like the sweet spot now. Okay. On 0 DTE. Okay. So let's go to the next slide here. Okay. So this one is compared, comparing, I went through, and this is a 27 VIX. All right. So the VIX was at 27, and now you can see the difference here, right? I mean, you can see the difference from 22 to 27 and how much greater these distances are to the money, right? So same case though, from from 5 wide to 10 wide, it gives you a huge amount of difference here. And then you get diminishing returns from your 10 wide to 15 wide to 20 wide, right? And I know Tammy, you guys probably seen her videos, or 1 or 2 videos, whatever. I think she trades 30 wide now. But even 30 wide, you just get that diminishing return that it just doesn't make sense, to do that. All right, let's move on here. Now we're going to look at 1 DTE. So 1 DTE compare at 27, right, at 27 VIX, compared to 0 DTE. Can you tell? The distance from 1 DTE to 7 DTE, it's actually greater on 0 DTE. So you get a better return on 0 DTE than you do on 1 DTE. Okay, that's why I trade also 1 DTE in the afternoon. All right, so it gets closer to 0 DTE, and that's really the best time to put that 1 DTE on. Right now, when it comes to 2 DTE, you can see here it ramps up again more, and then I like to put these on in the morning. 0 DTE, anything from 2 DTE to 4 DTE or 5 DTE. I like to place those in the morning so that I get the implied volatility at the start of the day. Okay. All right. So let's talk about trade positions and recent trades. So these are my trade positions, and you can see here for the short term that all of them are in the money right now. Okay. And today, actually, I'm going to be rolling all of these trades. Okay. Just because we have that JOLTS data and blah blah blah. So, but I've done this before, and I've rolled trades at down 300 or 400 points in the market, and I've come out profitable on those. Right. So I'm telling you, this year I've been able to roll these trades, maintain the margin, right, and the margin kept creeping up and creeping up, and I finally was able to close a ton of trades out, and they were all profitable. Okay. So just another routine. It's just another routine for today that I'm going to have to do, and then manage these trades for a while until they become profitable, and that's what I do. All right. So let's talk about a recent trade that I did, and this is a 7 DTE trade, right? That I want to share with you. So I call this the anatomy of a rolled 7 DTE trade. All right. And just to give you information about rolling these trades and why it's actually better to roll it than to take a loss is that, well, I'll let you decide. All right, so let's go through this. All right, so on August 17th, I put on a trade. It was a 4390 4400 call spread. Okay. And then the next one I put on was a put spread, right? So I basically made it an IC, right? So this information here is a running total of the credit that I'm gaining or I'm receiving. Okay. So then I closed the call spread for 10 cents, and then I put on another call spread for 65 cents, right? So I lost the 10 cents here, but I gained 65 cents in credit here, right? Then I sold to open another call spread. Again, let's see here, okay, and received 75, and then closed that call spread for 15. Now I had to roll the put spread, right? And it cost me 30 cents to roll it because I did want to take it down. And then I put on, actually I closed the put, I rolled it again actually, and collected 10 cents on it. And then I put on a call spread, or I actually closed the call spread for 30 cents. And then rolled the threatened trade, right, for 0. And now I have this position here, and it's still at 70 cents. But during that whole time, I collected $2.20, on that trade using the call spread and the put spread. All right. Okay. So yes, I'm going to have to manage this trade, but I have plenty of profit on it that that I can use to basically make sure that it comes out profitable. All right. So this is a trade. This is a 0 DTE trade, and it was August 25th. All right. And it was a normal day. I put on five. I put on and this I was still using 15 wide, and so I put on this trade. I got 55 cents on it, on the put spread and on the call spread, and you can see the whole day here it was in a range, right, until we reached the top, and then and by that time the premium had reduced so much because it was close to the end of the day. I wasn't gonna take the chance of going this thing going in the money, because the call spread, the short strike was 42.05. Okay, and so what I did was I exited the trade by closing the short strike, right, and it cost me 5 cents to do it, and it didn't really cost me 5 cents because in Thinkorswim, if you close a trade for 5 cents, you don't pay commissions. You do pay the fees, the exchange fees, but you don't pay the commissions on them. Okay, and they don't charge you for the 5 cents. So that's pretty cool. And so I do that from time to time when I want to get out of position and not certain that it's going to expire. Okay, but I try to let trades expire. Okay, so this is a normal day. And I do like normal days. All right, so this trade here, it's not completely normal, but I put on this trade. It was a let me see, 22nd. Yeah, it was a 0 DTE trade. All right, and it collected 70 cents. But as the market moved down, it just moved down all day long. And so what I did was I rolled that trade at the right time. Okay, so you can see here it was 2:30, and the market kept going down, and I didn't want to get caught, right? However, would I have made that? Yeah, I would have made that trade, but I rolled it, and I rolled it down from 41.25 to 4,100, so 25 points down, and I received $1 credit. This actually happens. Okay. And so what I did was I rolled it to the next day, and the next day basically I let it expire. So the 70 cents turned into $1.70 in credit. Okay. All right. So let's go to the next one, and I'm going to give you So this one was a day like today. Not it was actually worse day today. Okay. So I'm going to walk you through this presentation here, okay? And this is how bad it can get, okay? And so from 518 to 523, this was this year, right? In May. So I put on a 39.50, 39.35 put spread, and then I put on the call spread. Okay, the accompanying call spread. Well, the market kept going down. It just kept going down. All right, and then what I did was I sold to open. I sold to open another put spread there. Okay, and then I closed the call spread for 15 cents just because I thought the market was going to return, and it never did. And so after that, basically, I rolled the position. I rolled a position, so I put on 2 put spreads, right? And I rolled a position, and I collected 75 cents for it. So I rolled it from 39.50 to 39.45, right? So not much there. And then I actually did widen the position. on there in order to collect that credit. All right. Then on 519, basically, oh no, 341. No, I closed the, I rolled, let's see, I rolled the 39.30. So the next day, basically, I had to roll the position again. And this time I went from 39.45, 39.20 to 39.30, 39.90, 38.90. Okay. So then what I did the next day was I bought the I bought that rolled position for 30 cents and closed it out, basically. Okay. So what happened? I was able to get out of the position without, with a nice profit, all right? But I had to add margin to it. And these are the requirements to be able to manage this trade. And so initially I put on a 15 wide position. So I used $3,000 margin on it. Okay. And I collected $1.20 on it, right? The first roll, I had to increase the margin from 2,500 to 5,000, all right, on that roll. And I received a credit, up to 270. Okay. And then the second roll, I had to increase the margin again to $8,000, right? And in this case, it was a negative 0.5. So, I subtracted that from the credit and ended up closing the trade at 30 cents with a net credit of $2.30. All right. So this is now the market could have kept going down. It could have, right? And I would have had to add additional margin. And so that's why, you need to have that margin in your account to be able to manage these trades, or else you're toast. Okay. And it works. All right. So let's go to the next trade here. And on this one, I think this one is a normal trade. Let's see. Yep. I opened the trade at 9:32. I opened the put side at 9:34. I let the market do what the market does, and I closed it at expiration. Now, I wish all of these trades were like this, but this is just a normal trade, and actually most trades close like this. Okay, the majority of them. The other ones you have to battle and fight for, but that's the way that it goes. All right. So those are the examples of those trades. Let me show you a little bit about quick technical analysis and what I use. This is support. You can see here. This is an hourly chart. This is support area. This is resistance here. Once it breaks support, it goes into a resistance area, and then it'll eventually break that too. And so that's how you look at support and resistance. Just really simplistic here. And then you have trend line support here, and that generally you can use too. Trend line support and resistance as well. Okay. What I really like to use is the fibs. And the reason I like the fibs is because it gives you straight line, straight line understanding of where those support and resistance areas are. And you can see here how it's tracked with the fibs, okay? And it stops and starts in different areas. So it's just a great tool to use for understanding support areas of support and resistance. Okay, so with that, I want to go into the bonus part of this session. So my question is, would you like to follow our trades while you learn? Because we're a trade alert service, but we actually teach people how to manage these trades, turn them around and make them profitable. Okay, and that's really the goal. right, is to make sure that people come into our system, they learn what to do, and then they can go off and do it by themselves eventually. All right. But a lot of people stay because they're just making money. And the question is, would you like to do that? And the answer should be yes, because you're going to get, for what we charge to, it's such a small amount. You're going to get a lot of learning and a lot of practice in how to do this stuff. All right. And so remember, we talked about interested in learning new strategies, desire to see your account grow, and find the right strategy that is consistent, right? That's really the goal. And so how do you break those barriers, right? And the question is, are you going to keep doing what you're doing so that one day, this thing is going to stick, or are you going to take real steps to make it happen? Okay. And, one of those things is having an edge, and that's the thing that we give you is the edge. And so you also have to have no quit attitude. You have to stick with it. A commitment, discipline, and having an edge. And let me tell you something, days like today are not fun. They're not fun, because now I have to go in and I have to adjust all these trades and manage them, and it's going to cost me. But in the end, I know that I'm going to come out right. Okay. Because I've let the market go down 400 or 500 points, and I was able to recover from that, from that scenario. All right. With profit. So if you want to be successful, this is just a great program for you to be able to, come in, learn, and a lot of people stay for 2-3 months, and then they've learned what they've learned, and they have something that they can use for the rest of their lives. All right. And so it's just a great scenario. And so our trade alerts are instant. They come directly from my account, most of them, right? IntegraBot is the system that we use to integrate my trade from my account to Telegram. All right. And the trades come in. Once I put in a trade, it takes about 20 or 5 to 30 seconds for that trade to come in. A lot of times I get impatient and I put the trade out there anyway so people can see it. But it comes directly from my account. All right. So I'm trading with you. It wouldn't be good if I said, oh, okay, just put on this trade and then I'll help you with it. I'm helping myself and I'm helping you when you're managing these trades. So whether you're just getting started or already successful, you can expand and learn something new, and it's gonna transform your trading for your life. I'm telling you, this type of trading, if you really, really focus on it and learn. So our trade alerts come in with Telegram. And this is just examples of, how we do it. We have 3 chat groups. One is for talking about anything you want to talk about. The other one is for, actual trades that, you have questions on, so that there's no clutter in there. And then the third one is subscriber trades. So we have full-time traders that are on board with us, and they put on their own trades too. So you're actually learning from other experts as well. Okay. So we have those guys in here. And Ike, I've been trading with him for about 3 years now. He's an amazing technician, right? And we have briefings Monday, Wednesday, and Friday, and then he shares information about Elliott Wave and ABC method, and really can hone in on where the market, probabilities are going forward, right? So we have live chat groups, and we also have channels, and the channels are one-way communication. And so Ike and I manage these channels, and there's no talking in these channels. There's just trade alerts that come out, whether we're putting on a trade, we're taking off a trade, or adjusting a trade. They're always present when we put these on. Okay, we don't just say, "Hey, put this trade on." We actually document each one of these. All right. So we have great, success stories. I'm not going to get into all of them, but you can see here that people are pretty happy with the service that we've had, and I'm going to, this is not get rich quick scheme, at all. This is not, to say, hey, come on in and stay here and just to grab you for a month so we can get the money. That's not true. What we do is we want to make sure that, you guys learn how to trade, learn the right way, and give you a trade, a method of trading for the rest of your life. All right. In so much that I have a guarantee. So if you subscribe for 1 month and lose money following my trades, I will refund your subscription, not what you lost, okay? Because we all make losses in trades, right? Some one way or the other. And I'll refund your subscription by 125%, right? I have never made good on that. That's a good thing. So that's our guarantee, right? You will make money on the first month, and it's guaranteed. And so here are the prices. So let me share with you the offer that we have here. Okay. And you should be able to see it, all right? So the bonus is that you're going to get $20 off for life if you sign up today. And the bonus is that if you come in and within the next 3 hours you sign up, then we will give you $20 off for life on any subscription. All right. And so we have 3 different subscriptions. The first one is the $39 one, which is basically monthly expiration trades, but you also get access to the subscriber trades, the communications in the channel, getting help when you need it, et cetera, et cetera. All right. And then we have the 79 plan, which includes the monthly. We also have the 0 DTE, 7 DTE premium trades as well. Those are Ike's trades. These are like, stock option trades that he puts on constantly. And then we have the 109 plan where we have futures. It includes futures and the rest of the stuff that we do. All right. So you can decide on one of these 3. And if you come in and decide, hey, this one's not for me, there's a method of either downgrading you or upgrading you, whatever you want. Okay. And no cost at all to do that. Right. So that covers it. So the question is, if this is for you, you want to learn a step-by-step process to gain income in the market, by earning while you learn, or you want to finally break the series of losses, or you want to earn constant income that sets you apart from other traders, this is it. This is it. Okay. I don't think you're going to get a better plan, right? And again, what you get access to is $20 off for life, a professional traders group and subscriber trade group, training and education. We actually have a training and education channel that gives you, higher content for learning as well. So we have a lot of Elliott Wave in there, a lot of the types of trades that I do, et cetera, et cetera. Automated signals that comes, seconds, well, a few seconds, 10 to 20 seconds, from my account. You get the trade entry fill price, the target price on the trades, and my guarantee that you'll make money. It's just a winning combination, guys, right? And and that's what I got. So hopefully, what I shared with you today is something that you're, that's going to be of value to you. And even if it's not of value to you, to join, it's okay. Hopefully you got something from this webinar, and would really, really hope to see you in our group. And again, if you guys miss something, then there's three other webinars that you can go to, and we have the replay that's going to be coming out today. All right, so let me answer some of these questions here. Let's go to the top here. Does PDT apply to futures? It does not apply to futures. So you can trade future spreads in there. Then you won't get get pinged for it. Okay. How about trading ES futures? Yeah, we talked about that. Sound is okay. Do you always require a credit when rolling? No. Sometimes I don't. Sometimes I do it for a debit. And the examples that I showed you, the example that I showed you was we had a debit in there because I wanted to roll that position down. Worst case scenarios requires multiple consecutive rolls. Worst case scenarios and expenses. So in January, I got stuck with trades that I still have right now. Okay, so I got stuck with these trades, and I haven't got out of them yet, but I did get out about 80% of the trades that I was holding because I was able to continue to roll down, widening those spreads. And yes, it cost money, but eventually the market came up, and I was able to get out of all those trades, and they were eventually all profitable. I have two more trades. Well, I have a few more right now, but I'll get out of those. I have two more trades that are still high. They're in the 45 range, 450, 4,500 range that I'm still working through and getting out. Okay. Some of those are not profitable because I was just learning this method that I'm using now, so I rolled them for debits, but now I'm able to roll them for credits and start getting those profitable. And so that's the goal. So yes, I've been down about 3,900 to 4,500. So think about that. 3,600 we went down to, right? Around 3,600. Yeah, 3,600 to 4,500. So almost 1,000 points that I've been managing these trades. And I plan to get out of them, one of them maybe not profitable, but, getting out of those trades. All right. So I don't do 50 wide, only when I have to, when I'm managing one of these trades. So I've gone past 50 wide, actually. Been trading 5 wide because the market, okay. That's not a question. How big is your capital requirement? I trade $100,000 account. And so with that, I trade small, right? But I'm constantly earning because I'm constantly doing 0 DTE trades all the time. And so that's sufficient for what I do. The course, you also do call spreads. I do since the main SPX is down. Yeah, so I do call spreads, and you can see today, I shared an example of several call spreads that I did. It's recorded as a profit column was cumulative. Yes, it was cumulative. Are the trades only spreads? Yes, I only trade spreads. I very, very seldom trade naked options. I can't do an example now, but but if you join, I will give you tons of examples. All right. 4,500. Yes. How many times have I rolled it? Probably 12 times, 13 times. Okay. I'll be updating. Yeah, I'm working on a new course now, and for those of you who already took my course, there'll be a very deep discount on that one. 4,500 rolls since January. Yes. Yep. Okay, guys, that covers it. I think we're done right on time. Hopefully, I will see you in the Trade Alert service. Okay? You guys have a great day. Thanks.